Hello, welcome to the second episode in the Drip in Action series. This is the July 2026 month-end update. I started this hypothetical portfolio on July 3rd, 2026 with $1 million, and the purpose is to check how the drip engine and the dollar cost averaging uh, will serve to increase the value of the portfolio over the course of a year. Now, in this month, a total of $1,390 were obtained as distributions from 4 different mutual funds versus the hypothetical paycheck contributions during this month. So let's dive into this episode. But as you see, this is the first month of this hypothetical portfolio, and it seems this is not a good month because the portfolio did not perform as well as I expected it to because of the market forces. The portfolio actually returned a loss of 2.82%. So let's dive into the mechanics, what worked, what did not work. It looks like the DRIP and DCA serve to increase the portfolio share of the total number of units, but the market moved against the portfolio. So now let's see uh, in the subsequent slides. Starting with this, we'll see the what happened during the month. Now, when I made the initial portfolio, and then I made another one. The FDG-FX gave a dividend on July 10th. FDG-FX is Fidelity Dividend Growth Mutual Fund. It gave a distribution on July 10th, and the distribution amount is $582.57. And on July 9th and July 23rd, with hypothetical contributions from Paychecks, July 31st, 3 other mutual funds gave dividends totaling or distributions totaling $807.53. But as I mentioned previously, the portfolio lost a few thousand dollars, and the portfolio ended with $973,051. So as you see, if you recall, I called this on the first slide. I called this that the portfolio reached escape velocity, meaning that the total dividends I'm getting per month, call it dividend or distribution. You see, the dividends distributions are more than the amount I'm contributing from paychecks. So at this point in time, even if I stop contributing from paychecks, the dividends themselves will drive the growth. But contributing will further provide more boost. Now let's see what DRIP bought in July. The 4 funds that gave dividends, distributions from in this month. The first one is the Fidelity Dividend Growth. It gave a distribution of $582.57 on July 10th, and immediately that amount was reinvested in the same mutual fund on using the net asset value of the mutual fund on that day, July 10th, which resulted in new units 11.75. So I got 11.75 units of Fidelity Dividend Growth without investing more into that fund, more new money into that fund. These other 3 funds that gave dividends on July 31st are Fidelity Capital and Income, I think it's Fidelity Growth and Income, and Fidelity Bond Index, and Fidelity Investment Grade Bonds. And they were reinvested. So that's the drip happening, dividend reinvestment plans. So a total of 1,390.11 was reinvested across the same 4 funds. Now, what is next? So I'm also showing you where the paychecks contributions went into. They went into 3 different mutual funds. 2 of them have seen before that they gave dividends or distributions. Two of them are Fidelity Dividend, Fidelity Income and Growth, and Fidelity Bond Index. And the third one that you see there is VVIAX, that's Vanguard Value, that is a stock fund. Now, in the next slide, we'll see why I have decided to contribute to these three funds specifically. This is the contributions from the paychecks. Why am I contributing to these three specific funds? And the amounts are in that order. Fidelity and Fidelity Growth and Income and Fidelity Bonds are getting $449.96 each. And the Vanguard Value is getting 385.70. Now, you see two are bond funds in blue, and the green is the value fund. So that's a stock fund. So why am I contributing to the value fund, Vanguard Value? Now, as you saw, in this month, tech was heavily sold, and as I'll show you in the next slides, the Vanguard Value held its own. So value funds typically fall less or even may keep up their value or maybe even grow a little bit during periods of volatility. And the next two slides, we'll see the composition of the portfolio and how individual funds in the portfolio performed in July, which also helps us to understand this particular contribution method. So on July 3rd, when the portfolio was opened, this portfolio is a scaled up portfolio, but the real portfolio is mine, which contains all the same funds. I have just scaled it up to make it $1 million. So in this, you see there are lots of funds. Many of them are, if it starts with F, it's Fidelity Funds. BPTRX is Baron Partners. That's a highly concentrated fund which handpicks a few stocks. I think there are like 25 to 40 stocks. That's it on the whole fund. And it's heavily concentrated in Tesla and SpaceX and Charles Schwab, if I'm right. So highly concentrated large growth stocks. VVIAX is, as I said, is Vanguard Value. FSELX is Fidelity Semiconductors, and GLEX is Goldman Sachs Energy Infrastructure. ARCX is Commodities, and then there are a few remaining things, other mutual funds, really small amounts. But as you see from this whole thing, the stocks comprise 66.6%, and the bonds is 23.7%, bonds and income, and the remaining is made up of a few other stuff, mutual funds like commodities. Now you see, whereas I want the portfolio to have 50% stocks and 35% bonds and income, because the portfolio is heavily invested in stocks already, I'm trying to lessen the stock portion of the portfolio and increase the bond portion and the value portion, although it's contributed, although the value funds also will have stocks in that. But remember I said value funds will have will weather the portfolio turbulences better. So Vanguard Value is one of the chosen funds to receive paycheck contribution. So in green down below here you see target allocation 50% stocks including 25% value sleeve. That's why Vanguard Value is getting some paycheck contributions, 35% bonds, and you see this is the remaining is distributed this way. So now one more thing I wanted to bring to the viewers' attention is BPTRX and FSELX constitute 28.3% of the portfolio but drove the majority of the losses, whereas the other things, as you'll see in the next slide, lessened that fall a bit. They provided some cushion. Again, just to remind the viewers, this is a hypothetical $1 million starting portfolio, and it's modeled on my real portfolio, but it is only for educational purposes or entertainment purposes. It's not financial or investment advice. So here is what happened during the month. Uh, Call it behind the hood. Uh, Total losses at the end of the month, all said and done, is $29,624, of which the majority contribution came from the BPTRX because during this month, SpaceX IPO was done. I mean, it came on the market and it fell almost within a couple of days after since its IPO, about 40% or so from its high. So you see, there's a lot of loss in that one. And then the Fidelity Semiconductors also lost a bit, $11,000. But you notice the what held its value, the Vanguard Value Index held its value and then increased a bit. Due to the international circumstances, the Goldman Energy Infrastructure gained a bit, commodities gained a bit, and then there's some small losses and gains in other mutual funds. So the total net asset value movement in the month is 29,624 in the negative, in the red. So now let's see, how did the portfolio compare with the two standard indices? I did not include the diamonds here. S&P barely made even with a small positive 0.3%. The hypothetical portfolio lost 2.82%, but it did slightly better than the Qs. Qs lost about 3.45%. But I need to add that the hypothetical portfolio uh, performance included the dividend distributions, but it did not include the contributions. So that's removed. And the SPY and Nasdaq in this calendar month, I did not see any dividends coming through. So the dividends are not reflected in the performance of the SPY and the Qs. Maybe next month they'll be included. Now here is the reconciliation slide. Starting value is $1 million. Contributions, dividends, and the net market movement, which eventually closed the month at $973,051. And this will be the starting point for August 2026. This feels like, 2 steps forward, 3 steps back, but it's the nature of the market, and just reinvesting the dividends and distributions obtained from the various mutual funds and dollar cost averaging kept the number of units growing. But what it means is next month, because the units are a few more, maybe 11 units extra, 13 units extra, whatever that extra units, they will get dividends or distributions owed to those units, which means in September, the units will be even more, the dividends and distributions I get will be even more. So that's the compounding thing. Now, this is some math. If you're interested in math, I will include the Excel data as proof of this, whatever I'm talking, and all the math there. You can see all the smaller movements also reflected in the math. Now, so the August starts with $973,000, $973,051. Now, I'm planning to make episodes as and when dividends or distributions get into my portfolio. And if such a thing happens mid-month, I'll make one episode mid-month. Otherwise, I'll make one at the end of the month. That's like August 31st. Now, again, this is not for financial or investment advice. It's educational purposes only. And this is the motto of the portfolio. That is, an ocean is built one drop at a time and make every drop pay, which means in drip terms, I got $1,390 and I reinvested everything back into the same mutual funds that gave those distributions. Now, finally, I have a question or two for the viewers. One is, do you drip in retirement portfolios or in your brokerage accounts or anywhere else? And what do you think is the ideal target portfolio allocation? Mine was 50% stocks, 35% bonds and income, and 15% others, including commodities. So, what do you think an ideal portfolio should be, or in your case, is? And just keep an eye on the channel and like, share, and subscribe so that you will not miss the next episode as and when it comes. So, probably sometime between now and the month end, or definitely one at the end of the August 2026. So, stay tuned. Bye for now.